Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. The New York exchanges had a terrific week and the TSX set a new high. Ross takes a look at nickel, gold, crude, and the U.S. and Canadian dollars. Veteran trader Victor Adair shares his thoughts on the wild swings in commodities and the impact the Russian invasion of Ukraine is having on markets. He says there's a whole lot more risk now than there used to be. TrendsJournal.com publisher Gerald Celente comments on inflation, the Russia-Ukraine conflict, cryptos, the Freedom Convoy, and the World Economic Forum. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Yeah, pleasure to be with you on another one of those eventful weeks.
Wow, pretty crazy times on both the New York exchanges and the TSX.
Yeah, I mean, here we are, Toronto, all-time high. I mean, when was the last time you saw that? Oh, it's been a while, hasn't it? And once again, reminiscent of 2000 when, the value stocks here in Canada just did famously while everything else took a bit of a breather. You know, it's really interesting. We were looking at the value versus growth, and there's just been that huge move in the last year away from growth. You know, we saw that with ARC and some of these other funds getting just absolutely creamed, and ended up with some weekly and monthly signals here in this last week that setting up for this reversal that we're seeing. So we had, I think, the 4 best days since 2020, finishing off this week as far as the U.S. markets are concerned. And as I say, with Canada, all-time highs. So it's pretty good all around. Nickel
and the London Metal Exchange. What's going on there? What's happening with nickel?
I mean, here we are. The exchange decides that they are going to renege on a whole series of trades, and they halt trading, then they try and get trading back again. We end up with some limit moves. This, as I've said before, the exchanges will do whatever they have to protect themselves and their members. That's the biggest part of this right now. Eventually this thing will unwind, but in the meantime, gosh, you got these bankers in the middle of it, trying to lay off some of this exposure. It's just an absolute mess. And say it's reminiscent of the days in the potato pits and back in the hunt days with silver when we were at $50 back in 1980, and they changed the rules so you could trade for liquidation only. Nobody could buy new positions. Yeah, this is the kind of nonsense that these exchanges like to do, just to make sure that they've got their members fully protected, and everyone else gets to just sit back and watch the devastation.
What's happening with gold?
Really happy with the gold market. We had a nice base under $1,919, and that base measured up into right into the targets that we saw here within the last week and a half. At the same time, we ended up with upside exhaustion signals. So those are pretty rare when you get them, especially across the board. In this case, it was gold, silver, palladium, platinum, and the crude oil market all the commodities in that grouping got to extreme levels on the 7th and 8th of the month. And then we had these big corrections. So we've given back, in round numbers, 50% of the big run that we had from the springboard lows back at the end of the year. And at this point, we're going into a consolidation phase, which is so normal. After times of conflict, and you go all the way back to the Iraq-Iran war back in the 80s and come forward from there, every time you get events like we've just seen, or we are in the midst of at least, with Russia and Ukraine, you get this pent-up buying, and you get a blow-off type of top. And it takes the better part of a month or two for things to settle down, and you want to find the relative strength index, the RSI, get down below 30. You want to actually now see us get to the point of being oversold rather than having been overbought. Once we do that, we can be ready for probably the next decent run as far as gold and silver is concerned. And, the measurements we've got would once again be to new highs, but that's going to take a little bit of while to put together this consolidation. And, we're seeing the consolidation in the crude oil market. Upside targets, we projected from the 2008 high up around 145. If you projected out the channel lines from there, they were in that 130 to 135 range as of the last couple of weeks, and we got right into that category. We've now corrected back, been under $100. I think that the 112 area should be a pretty decent spot from which to see a bounce and some pretty big resistance.
What's going on with the U.S. and Canadian dollars?
U.S. dollar had a respectable week on the upside. Not a huge week, but enough to clearly be in favor. We've gone from 89 and change on the index up to 98 in the span of the last. What have we got here? Last 3 or 4 months. So it's been a pretty good run. We're towards the upper end of the trading range. I think it'll have a bit of trouble going beyond this. On the Canadian dollar, we finally had a decent week here. The Canadian has truly been an underperformer relative to the commodities. You take a look at it just in this last few weeks. We're at 79.30 to finish off the week, but we had highs of 80 back at the first of the year, 80 cents. And with all the movement we've had in the commodities, you'd expect the Canadian dollar to have done much better than this. And, my thought is that if the commodities want to have a bit more of a correction than we've already seen, the Canadian dollar probably goes down and takes out the 77 cent support level that it has.
Ross, thank you so much for the update.
Always good to be with you, Jim.
We've been chatting with Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Victor Adair, next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Victor Adair. Recently retired from nearly 50 years of being in the brokerage business in BC. His website, victoradair.ca. Welcome back to This Week in Money.
Thanks, Jim. Good to talk with you.
Victor, on our last interview, February 18th, we saw just a few days later Russia invade Ukraine. Everything in the markets changed. Before we discuss individual markets, what do you think have been the most significant changes to financial markets since the invasion?
I think if I could boil it down to a word, Jim, it would be uncertainty. I mean, the level of uncertainty is always there in markets, but we just kind of kicked it up to an existential level with the invasion of the Ukraine by Russia, and then sort of subsequent event things from there. But if I could add another word or two, would be liquidity. Because of the uncertainty, liquidity kind of fled the market, and that shows up in any number of ways. But essentially, it's kind of like people pulling their horns. If you have no idea what's happening, or you kind of figure your risk is going to be way more than you normally like to take, you're either going to reduce your size, or you're not going to trade, or you're going to widen the bid-offer spreads, and all of that kind of stuff. Nobody wants to get stuck with something they can't get rid of, in other words. So heightened uncertainty, greatly reduced in some respects, liquidity, and the third part of the triangle would be volatility. I mean, some of the volatility metrics just went bizarre. I mean, I saw, say, crude oil, and we've just seen energy markets everybody knows they've been choppy, but some of the numbers in terms of the metrics for, let's say, implied volatility on calls and puts in crude oil traded between 50 and 100%. I mean, it's just incredible numbers. Hard to get your mind around it. So uncertainty way up, liquidity way less, volatility way up, and that meant, that was the market's way of telling you there is way more risk than there used to be, and in some respects, obviously, risk wasn't even quantifiable. You have no idea. I mean, when we started people talking about maybe the war widens to, we're going to see nuclear, or that word came up, and you just go, well, how the hell do you factor that into anything? So I think, to answer your question, the significant changes, I mean, surely there was lots of price action all over the place, but the uncertainty, the lack of liquidity, the volatility, and the realization that we're facing a level of risk that, we really have no idea how to deal with it.
Commodity markets have seen some pretty wild price swings, from nickel to gold to wheat to crude. What do you make of those swings, and where do you think markets go from here?
Yeah, right. Well, okay, first of all, let's do it this way. I mean, there was news, okay? There's like headlines, and there's people commentating on this and that and so on. And if we look at the energy market, I think the market had been pre-warned, as it were, by spikes that we saw in European natural gas back in October and December, spikes that were based on the possibility of less energy flowing from Russia. Nord Stream number 2 maybe not going to deliver, maybe not going to get built, and just the thought that Russia might be playing some kind of a political game and holding back energy. So we saw these incredible surges in nat gas prices, and then obviously the knock-on electricity prices, because they use nat gas a lot to create electricity. But there've been these never seen before sort of spikes in those markets because of shortages. So when Russia invaded Ukraine, it was a whole new ballgame, but it was kind of in a way that the same playbook. Prices spiked because of the possibility, not only on the invasion, but the sanctions, that there would be less of those things available. Now, when I say things, I mean, the gas, the energy, wheat, but gold, you mentioned, gold sort of always goes up on a crisis like this. So, it's sort of normal for gold to rally on a war situation. So I'm saying there was the news, but then for me, there was also sentiment. And, for instance, in my trading desk notes of March the 5th, I think the first one of the month, I wrote a paragraph about the possibility that we would have somewhere a big short position that would blow up because of the stress that was happening in the market. That the blowing up would cause, huge margin calls and collateral damage is what I referred to it as. My first guess would be the European energy sector, that there would be, like, physically less or no energy supplies coming from Russia to Europe, and that markets would just freak out, basically. My second guess was that food prices that were going through the roof would result somewhere in the world, the peasants rising up and burning down the castle, because that's what folks do when they haven't got anything to eat. But it turned out, so far anyway, it was nickel. And, it fit the news in that, gee whiz, Russia produces a big chunk of the world's supply of nickel. All of a sudden, no nickel. Prices should go up. And, whoops, we discover there is indeed a massive short position by somebody, in this case, a Chinese tycoon, got short position in nickel, huge. And it seems as though it's all over the street. And then the LME tries to deal with it, and then that's, blowing up, as it were, the classic. We've got collateral damage. We have, it turns out, billions of dollars in margin calls. And interestingly enough, staying with the sentiment side, nickel, gold, copper, wheat, crude oil, all spiked at about the same time, give or take, a few hours here and there, a day maybe, and fell back, all on the same dates up and the same dates down. Like it was just one big market all the same, and it was really then, it was a sentiment reaction, this sort of existential fear ripping through the markets that, everything's falling apart or whatever, and that's what happened. So again, to come back to your question, what happened? That's what happened. Where do we go now? Well, let's say with crude, maybe we hit a high of $130 roughly on WTI. That's the highest we've been at since 2008 when we traded to 147. And less than 24 hours later, the market was down $25 from that level. It seems as though that spike up and tumble back down in those different markets, whether it's wheat, gold, crude, nickel, have calmed down to some degree, but my base case is we're not out of the woods yet. I think there's more stress is going to show up in these markets.
It was interesting to see both gold and the U.S. dollar surging higher last week. Does that correlation continue, or do we go back to the usual with gold and the U.S. dollar moving in opposite directions?
I think at some stage we will go back to gold and U.S. dollar moving in opposite directions, and we've even seen a little bit of that this week as markets have shifted from, say, extreme fear to less fear than we had last week, maybe even a little complacency, although I'm sorry to even use that word really. But it is not unusual in crises over my 40, 50-year trading career to see gold and the U.S. dollar both spike when there's a crisis. It is a case of capital seeking safety. And despite what some people who want to disparage the U.S. dollar have to say, when things are getting tough out there, capital goes to the U.S. dollar. It doesn't go to the Venezuelan Bolivar. It doesn't even in this case go so much to the Swiss franc, although certainly Swiss franc did move to nearly a record high against euro. That's one of the gauges I watched there on the currency side. So anyway, the capital goes to safety. U.S. dollar and gold can both jump together, and then as if and when things kind of calm down, I think we go back to an environment where, kind of generally speaking, gold and U.S. dollar move in opposite directions.
Despite the uncertainty created by the war, the stock market rallied pretty sharply this week. What do you think happened?
In my trading desk notes of last week, and I'm referencing my notes because folks can go and read it. It's there. I wrote that the equity market sentiment was extremely negative, and sort of on a if and when the markets started to rally, the rally could be dramatic. So I'm going to go back to my playbook here of sentiment. I trade sentiment a lot in the markets, and we can talk about that more as we may go along. But the market was just I think we've been in a bearish trend. Obviously, the indices have not fallen nearly as much as the broad market. I think a lot of the folks that have listened to my interviews with you over the last year or two and from other sources would understand that, there's the handful of big tech stocks that have made all the difference. I was looking at a chart today that was showing how incredibly the U.S. market has outperformed the rest of the world. But if you take out, let's say, the top 10 stocks from the American market, it's not much different. So it's just been these big, the Apples, the Microsofts of the world, these stocks that have made the indices look so strong. Certainly since last fall, the internals of the market have been deteriorating, and we've seen the market kind of in a bear trend, the overall market. So with the bear trend, with the thoughts that maybe the economy is going to slow down, the Federal Reserve is going to be raising interest rates, and then, let's throw in a war, we just kind of got extremely negative sentiment, and the market started to rally. I was buying the market last week. This is trading my own accounts, and I was looking to pre-position or get in front of a rally. I thought if this market starts to rally, it'll be hard to get on board. I need to get in ahead of time. And I lost money doing that last week. The market in my world starts trading on Sunday afternoon, and beginning Sunday afternoon, I was buying the stock market this week. And I do that. I don't mortgage the house or, bet the ranch and that sort of thing. That's not how I trade, but I had a great week this week in terms of I caught that swing in sentiment, and I was all out of my positions at the close yesterday, and market kept going higher today, and I'm not involved. And I'm also was thinking, I think we had the hottest of the strongest 3 months in the S&P, 3 weeks. Sorry, it's been a long week. We had the strongest 3 days on Tuesday, Wednesday, and Thursday in the S&P that we've seen in a year and a half or something like that. So thanks very much. I'll take the money and go to the sidelines. I think also, Jim, just maybe to finish, I've been writing a lot that I thought we were looking at a bear market, and that even the indices would go down more than they've gone down already. And I still kind of hold that view. And if that's the case, then what we had here this week could very well have been a sizzling bear market rally. And when the market is in a bearish mode, every once in a while you get these breathtaking moves to the upside. And it doesn't matter, what it is, but certainly in the stock markets, and let's say over the last 100 years, when there's been bear markets, you get scorching bear market rallies from time to time. That might have been what happened. I don't know. Maybe in a month or two from now, we'll be at new all-time highs. And speaking of that, by the way, the Toronto market is at new all-time highs. The Toronto market, courtesy of the world's view as Canada, as a basket of commodities. Capital has gone into the Toronto market, and even though the American markets, European markets, Japanese markets, whatever, are nowhere near all-time highs, Canada is.
The Federal Reserve raised interest rates this week while forecasting they'll continue to raise rates and reduce their balance sheet. How does this impact the markets you trade?
I think the Fed did pretty much exactly what the market was expecting, and it wasn't that the market was so clairvoyant. I think the Fed was telegraphing what they were going to do and all that. But anyway, let's leave it at that. The Fed had their meeting, and it wasn't a big surprise. There's always volatility around the Fed meeting, and we had some of that for sure. But take this perspective. The Fed is following, not leading, the market. Interest rate futures have been trending higher, in other words, pricing in higher and higher interest rates since October. And the rate of change in that market has done nothing really but accelerate, certainly at the short end. I'm talking, like 3-month money, whatever. In fact, short rates lately here have been going up much faster than long rates, which is leading to inverted yield curves. And for some historians in the market, they'll tell you that inverted yield curves 9 times out of 10 or whatever are correctly foreshadow a recession. So it would be not a surprise. I was going to say it would be ironic, but it would be not a surprise if the Fed, which after maintaining for far too long that inflation was transitory, now proceed to continue to raise interest rates into a recession, and then we get, an inflationary recession, which is called a stagflation, and it's just about the worst of all possible worlds, in the case of, certainly for the stock market. I mean, God bless the Fed. I wouldn't want the job. If they told me, oh, you can replace Jay Powell, we'll pay you, $5 million a year, I go, well, yeah, but everybody will hate me if I did what I needed to do, and I wouldn't be allowed to do that anyway, so I wouldn't take it. You can't fix supply chain price pressures by raising interest rates, unless, I suppose, if you raise them so far that the economy falls into a serious recession and there's no more demand. I mean, he's in a pickle. I wouldn't want his job. So I don't know if I kind of answered your question, but the Fed did what the market was expecting. The market's been expecting interest rates to go higher. They're looking for them to continue higher. And, I guess we'll see where that goes.
This week, the Canadian dollar rallied even as crude and other energy prices fell. Is the loonie no longer a commodity currency?
No, and yes. Sorry. As we discussed over the past couple of years when we do these monthly interviews, my thoughts on the Canadian dollar, what influences it, haven't changed much. There's essentially 3 things. Canadian dollar is influenced by the relative strength or weakness of the U.S. dollar, by sentiment in the market, whether the market's risk on or risk off, and certainly over a broad sweep of time by the commodity market. There is very good correlations between the Canadian dollar going up or down, along with or alongside the ups and downs of the commodity market. From time to time, there's other short-term things that may have an impact. I know from time to time we've seen relative interest rate differentials between Canada and the United States have a big impact on the Canadian dollar, but that's not the case now. So here's a case in point. I mean, the crude oil spiked to $130 and Canadian dollar went down. So Canada wasn't following crude oil on the upside. And then when crude oil came tumbling back down, Canada was going up. So it was like, well, and I have to make the point here that when you're looking at intermarket relationships or correlations across assets, you can find them, and just when you sort of find one and you say, oh, well, if this happens, then this other thing should happen because of the first thing happening. That's, as a trader, when you learn that correlations change. So Canada is, yes, very much still a commodity currency. We just talked about the Toronto Stock Exchange is at all-time highs here as the world sees Canada as a basket of commodities. But the Canadian dollar in the past couple of months has been very much a function of the relative strength or weakness of the U.S. dollar and whether it's a risk-on or risk-off market. So this week, the risk-on, risk-off aspect of the market was definitely risk-on. I mean, we had a surging stock market in the United States. Then that's a risk-on sign. So I think that's been the play here. That has trumped, if I can use that word, the impact that commodities or crude oil especially will have on the Canadian dollar exchange rate with the U.S. dollar.
You're an active trader. You take positions in currencies, interest rates, commodities, and stock indices. What's on your radar screen as you prepare for next week?
I think the thing that's really on my radar screen is this isn't over. And by this, I mean the tension that has been pervasive in the market because of the Russian invasion of Ukraine and the subsequent events like the sanctions, the worrying whether or not China's going to go one way or the other. Are they going to, try to speak to the Russians to say, hey, back off, or they're going to form some kind of a block, and then it'll be the West against them and all that. We've had some exaggerated moves in the markets, I think, because of the uncertainty, the lack of liquidity, the volatility. I don't think that's going to calm down right away. I just mentioned it's possible we had a bear market rally, a terrific one, let's call it around 2,000 Dow points from the Tuesday lows to Friday highs. That's a pretty stiff rally. Somebody had correctly sussed out that we're in a bear market and had bear market positions on. It was probably a painful week for them. I don't think liquidity is going to come back to the market, in a heartbeat. Volatility will continue. And I don't think we've seen the last of somebody blowing up out there. And the reason I think that's likely is because there's so much leverage, in play all over the world in different markets. And, you just have no idea who's doing what out there. So somewhere there's somebody else that's used a lot of leverage and they're wrong in the market and they're going to become visible and probably like the nickel guy did. And that will cause some more turmoil. So I'm flat. I had a good week. This has actually probably been my best week of the year in terms of trading performance. But I'm flat going into the weekend. I just don't. One of the reasons I like to get flat going into the weekend is because if something happens, I can't do anything about it. If I'm sitting in front of my screens and I've got a position on, I also have stops in the market. I'm not thinking, well, if it goes down there, then I'll do this. No, they're in the market. So if I'm sitting here and a piece of news hits the market and the market goes against me, unless it just immediately gaps to a limit level, I can get out. But if I've got some positions on over the weekend and, somebody drops a bomb of some kind, then the markets could gap against me when they reopen on Sunday night or Monday for most folks. And, I'd be taking more of a loss than I would normally. So I'll do my homework over the weekend and say, look at all the charts that I look at, and I kind of think to myself, and I make some little notes, well, such and such happens, and this is what I'll do. And I'll be open to reacting to whatever happens.
Before we wrap up, I'd like to reference something you wrote in your blog last week. In essence, I think you implied you trade markets even though they don't make sense to you. Is that right? What do you mean by that?
Yeah, I wrote that in my notes, and here's my thinking. People want to know why, and that's dangerous. I mean, I think it's important in markets to have a questioning attitude, in effect, to say, hey, well, why did that happen? You can chase down a rabbit hole and investigate things, and maybe you get a better understanding. But the thing is, with trying to figure out why, is you might come to the wrong conclusion, and here's where it gets dangerous. So, you're sizing things up, and you say, okay, I think such and such is going to happen, and if that happens, then this other thing, this market will move that way. So you put a trade on in this market, and sure enough, that market moves in your favor. And you're saying, hey, great, I saw what was going to happen, and I positioned properly, and I got rewarded. Let's rinse and repeat. Let's do that, because obviously my crystal ball works. And, I'm exaggerating here for effect, but I want people to get the point. Here's where I come from. In the markets that I trade, I have no idea who else is trading my markets. I have no idea what they know, how well they're connected, what kind of size they're trading, what their amount of risk is, and that sort of thing. So when I look at markets and I'm just puzzled as to why something happened, in other words, I think, gee, that doesn't make sense. Then I go, oh yeah, that's right. It doesn't have to make sense because I have no idea who all these other people are. They may be getting, to tomorrow's headlines today, and they're taking a position and making the market move. So now that might sound a little cynical, and I think on a short-term basis, that's maybe a good way of looking at things. Benjamin Graham used to say, like, in the short term, the market is a voting machine. In other words, maybe more driven by sentiment. But in the longer term, it's a weighing machine. So I think, if you are taking a view over a few years, and you say over a few years, the population growth and all of that, I think real estate should be strong because people need a place to live and so on. Okay, you can do some reasoning like that. But for shorter term swings in the market, I think there's just noise out there that you cannot anticipate. So, I can trade markets that don't make sense to me in terms of, I figured it out. And just to wrap that up, Jimmy, therefore, I don't make money by thinking I've got a perfect crystal ball. I make money by managing risk. I think what I do with a position after I've got it on is way more important than whether I decide in the first place to be a buyer or a seller of a market. In other words, forget about having a great crystal ball. You don't. And if you have whatever methodology that you have that gets you into a market, and by the way, not being in a market is also, a position. Sometimes you just say, my objective here is to try to make money, but I'm not going to just throw my money at the wall and hope I get lucky. I'm going to try to take a position where I think I've got some idea how much risk I have, because I could well be wrong on my call, and then manage the risk of that trade, and, you just keep repeating. And, for me, when I put a trade on, I absolutely believe I could lose money on this trade. Because things can happen in the market that I just don't anticipate. So I live with that. So therefore, I keep my size to a point where if the thing kind of blows up on me, it's not going to make any difference in my lifestyle or my account. And I just try to grind it out. I think folks read a lot of books about people that, hit it big, some guy like in The Big Short, he just knew such and such was going to happen and he levered himself up and hung on through tough times and was hugely rewarded. Well, that's more likely the rare case. I think a lot of times when somebody thinks they know what's going to happen, loads up, they go down with the ship. So when I say I can trade markets that don't make sense, that's what I mean. You can't know, so don't blame yourself if you don't. And you're going to make money by, at least this is me, I make money by managing risk, not by having a terrific crystal ball.
Victor, thank you so much for being on This Week in Money.
Jim, it's always fun to talk with you. I know I ramble a bit. I just got a lot on my mind here, but I just also try to tell you what I really think.
My guest has been Victor Adair. Check out his website, victoradair.ca. Coming up, Gerald Celente, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Gerald Celente, publisher of the Trends Journal, online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Well, thank you.
Can you tell us about the latest issue of the Trends Journal? How many pages this time?
185, and no ads, and it's a weekly. And it averages about 150 pages a week. No ads. We're giving people the news, that's the trends the current events forming future trends, what's going on, what it means, and what's next. And we don't take sides in our coverage. We just put out the facts. This is what's going on, this is what it means, and this is what's next. And that's not what the media is. When you look at this coverage of the Ukraine war, it shows you the dishonesty and the one-sidedness of the coverage. And again, I want to make this really clear. I launched Occupy Peace, so I'm totally against what's going on with the Russia invasion. But you pick up the newspaper each day, and it's about civilians killed, hospitals destroyed. It's terrible. But they didn't cover like this when the Iraq War went on. Well, they only killed, about 850,000 people. They didn't put this kind of coverage when they were bombing Yugoslavia, NATO with Iraq and NATO in Afghanistan. Well, it was only there for 20 years in Afghanistan. Operation, quote, Enduring Freedom. They didn't cover it like this. We never saw photos, or very rarely. Hey, how about Fallujah? Wasn't that a nice one? Oh, how about Mad Dog Mattis? Oh, the American, the American general with all those wonderful quotes about him. The lovely things that he said. But those Russians, they're terrible. And again, I'm totally against this war. But you think, how about, quote, it's quite fun to shoot them, It's a hell of a hoot. It's fun to shoot some people. That's 2005 from Mad Dog Mattis. You go into Afghanistan, you got guys who slap women around for 5 years because they don't wear a veil. Guys like that ain't got no manhood left anyway. So it's a hell of a lot of fun to shoot them. How about there are some assholes in the world that just need to be shot? Oh, that's Mad Dog Mattis too. Oh, wonderful, wonderful. Oh, but those Russians. Oh, how about George W. Bush lying America into the war of Iraq? Oh, that guy Saddam Hussein has weapons of mass destruction and ties to Al-Qaeda, and all of the media blackballing people like me that said those were lies. So this is disgusting what's going on, because they are leading us into World War III. When we're little kids, they teach you the crap. World War I began when they shot the Archduke Ferdinand in Sarajevo. What the hell's a Sarajevo, and who cares about the Archduke? It was leading up to that. We are leading up to that. And it's the pot calling the kettle black. Oh, Biden and Harris and the UN Secretary calling Putin a war criminal? How about Bush a war criminal? How about Clinton a war criminal? How about Obama, the Nobel Peace of Crap Prize winner? Quote, I want Gaddafi has to go. Hillary Clinton, Gaddafi has to go. Oh, he's only the richest country in Africa, where the people had so many benefits and rights. Oh, how about Assad has to go? Quote, that's an Obama. Assad has to go. Oh, that's not war crime. Oh, they only killed, about 625,000 Syrians? No, this is disgusting what's going on. And just as the people bought the COVID war, just as they marched off to George W. Bush's war, we're going to get that guy Osama, what was his name? Bin Laden. We're going to get Bin Laden dead or alive. Dead or alive. Like a little clown. And only 88% of the Americans believed them. So that's what's going on.
How can people sign up for the Trends Journal?
Trendsjournal.com. Trendsjournal.com. It's the only there's no magazine like it. If anybody could show us one that comes close, please let's see it. We're giving every ounce of energy we have for the readers so they could prepare, prevail, and prosper in these times ahead.
Gerald, I probably don't have to ask you what your rant for the day is.
Well, yeah, it's not a rant.
Yeah.
Our lives are on the line. Look how they robbed us of our freedom. Oh, you're up in Canada? What do you got, that little daddy's boy up there? The little guy, another actor? Who can make this crap up? Look at the guy that's playing the president of Ukraine, Zelensky. What did he do before that? Oh, he was an actor on TV playing the president of Ukraine? Oh, how about the Freedom Convoy? Screw you, no freedom. Hey, I'm little Trudeau. I'm a daddy's boy. How about the Emergencies Act? How about people that donated money can't get their money out of the bank? Rant? People better wise up because these people are going to kill us. Just like they sucked the joy out of life with the COVID war, they're ramping it up and ramping it up.
Does it look like stock markets are bottoming, and could we see new highs in the Dow?
It's a gamble. It's a gamble. It's a rigged game. How about a thing called a plunge protection team? Yeah, the Federal Reserve playing the game. No, the market should crash. They should have crashed two years ago. What did they do? They pumped in all this cheap money, and the bigs got bigger. Merger and acquisition activity is an all-time high. Median household income had the biggest declines ever. All the money's going to the top. So they're going to rig the game. They're going to rig the game, but it's going to, I believe this time it's going to be very difficult to salvage it because inflation is going to continue to skyrocket thanks to the moronic sanctions that Biden has put on and other countries on Russia. So what does it mean? Oh, you like paying more for oil? Oh, you like paying more for food, wheat, corn, soy, one after another. Sunflower seed, rather. Sunflower, one after another. Oh, palladium. Oh, that stuff they use for catalytic converters. That Russia produces 40% of it. So we're going to see inflation going up. They're going to have this 25%, 0.25%, a quarter point raise of interest rates by the Fed equals nothing. Nothing. And what clowns? Remember, it was temporary. Then it was transitory. Yeah, now it's transgendatory. You know, make up any crap they want. They knew it was real. They used to say they're going to raise interest rates when they hit 2% inflation. And what are we at? Almost 8? 40-year high inflation rates? They're going to do once upon a time, the story goes, there was a person by the name of Jesus Christ. And what does he do? He makes a whip to drive the money changers out of the temple. Yeah, I wonder if Jamie Dimon's great-great-great-great-great-great-great-grandfather was there. Oh, and what happens to Christ 3 days later? He's on the cross. All right? That's who's running the world.
What do you think the real rate of inflation is, and what is dragflation?
The real rate of inflation, according to people like John Williams Shadow Stats, we're looking at about 16% inflation. And dragflation, they're saying stagflation, stagnant economy, and increasing inflation. We're saying no, increasing inflation and dragging down, not stagnant, drag, falling economy. So the economy is going to go down and interest rates are going to go up. Inflation.
Could interest rates related to the bond markets be setting up to move higher and faster than expected?
Again, they're rigging the game. You know, they're going to do what they want. Look what they just did. Everybody expected the Fed to raise interest rates, 0.5%, and all they did was, a quarter. It's rigged.
We keep hearing gold and silver markets are highly manipulated. If that's true, what are the chances we could see huge spikes in gold and silver prices?
Well, I'm very bullish on gold and silver as well. Gold more so. And it's the ultimate safe haven asset. There's no question about it. You could see what the regulations are doing to cryptocurrencies and how they slide. Are the precious metals markets rigged? I just mentioned Jamie Dimon gang. Yeah, they got caught rigging the precious metals market. They gave him a slap on the wrist, a couple of $100 million after rigging it for years. So again, they're criminals. They're murderers and thieves. Morons and imbeciles call the people that are in government, they call it a government. It's a crime syndicate. How many more wars do they have to start? And how much more of our money do they have to steal from us?
Was the run-up in the price of nickel a short squeeze, and could we see more short squeezes ahead?
Again, the whole thing is it's a rigged game. You could see anything. Anything can happen. And again, there's no reason for the markets to keep going up. But as we're talking about, gold and silver, silver should be double the price of what it is. Gold is finally, moving back up to rates where it should be, but it should be much higher. And so that it's the nickel thing is a rigged game in front of everybody's eyes, just like they did again. How they rigged the all the other markets.
What are you seeing ahead for crude oil and gasoline?
Higher, unless there are wild cards. Nobody can predict the future. There are too many wild cards, be they man-made, as we're seeing now, or made by nature. Earthquakes, whatever. So, what's going on in China with the lockdowns, that's going to really bring down demand if they keep these lockdowns going on. So it depends on things like that. But what's going to keep the prices high is the tensions with Russia and in the Middle East with Israel and Iran. And, Israel keeps bombing, Syria as much as they want. They admitted it. And Iran's starting to fight back. So if there's military action that breaks out in the Middle East, you're going to see oil prices. Well, we saw them hit almost $140 a barrel for crude. You're going to start seeing $200 a barrel. It'll destroy the world economy, and that'll bring down the equity markets. And again, go back to 2008 when the panic of '08. You saw skyrocketing oil prices, and that's what we're facing now.
We're hearing rumblings Putin is actually taking out bioweapon labs and the New World Order in Ukraine. What are you hearing?
Well, you heard Victoria Nuland, one of the undersecretaries of, this Victoria Nuland, by the way. Again, we wrote about this when it was happening back in 2014. She was an undersecretary under Obama, and anybody could Google it up. Victoria Nuland, 2013, Washington, D.C., and one side of her right is Chevron, the other side is Standard Oil, and she's rapping on about how we're sending $5 billion to Ukraine to bring them democracy. So they overthrew the democratically elected government. So here we are again with. I'm sorry, your question again was on.
Are they taking out bioweapons?
Oh, the bioweapons. So there she is. She's saying that we have bioweapons. They were building them there. So. That's what they're saying. She said it out of her mouth, and Marco Rubio cut her off. Anybody could look it up, and he changed the subject. So who knows? Who knows? And again, with people, I'm totally opposed to Russian invasion, 100%. But what has Putin been asking for? NATO was not supposed to expand, quote, 1 inch, according to James Baker, and you could Google this up. It's in the National Archives of after Gorbachev made the deal and they broke up the Soviet Union, and they turned Germany back and all the other countries. There were 16 NATO countries back then. Now there are 30. They have weapons. Well, if the Russians were up in Canada over there and had missiles aiming at the United States, and the Chinese were down in Mexico with missiles aiming toward the United States, you think we'd get upset about it? So are the bioweapons? Yeah. Of course, there's nothing I believe. There's a book by who's one of the top decorated Marines in American history, Smedley Butler. War is a racket. Read it, and that's all this is. And again, if I was Putin, all I would have done was I would have brought more missiles to Cuba. That's how they ended it the last time. America had weapons aiming from Turkey. Aiming at the Soviet Union, and then Khrushchev brought missiles over to Cuba. Kennedy made a deal with them. Boop, Cuban Missile Crisis was over. We'll take our missiles out of Turkey. You take yours out of Cuba. See you next week, okay? And boom, they killed Kennedy. He was against it. He was against the Vietnam War. And 8 months after he was assassinated, LBJ got us into the Vietnam War. Oh, those Russians, aren't they terrible with these wars they have? Oh, yeah, I forgot about the Vietnam War. Only killed over 3 million people. Blasted the place with Agent Orange. Oh, and those bombs in Cambodia and the other areas, forget about that. It's okay. Kill who you want to kill. One after another. One more after another.
Does it look like the World Economic Forum has infiltrated all levels of government around the world?
Yeah, the bigs are in charge of everything. They're in total charge. And it's right in front of everybody's eyes. When I was a young man, they used to have grocery stores, hardware stores, stationery stores. Now they're all chains. Drug stores, drug chains. The bigs own everything. They're in total control. They own the media. Well, in the United States, what do you have? 6 companies control about 92% of it. And look at. Got to be careful what I say on the Gerald Celente YouTubes because they'll take me off. Censorship. The bigs own everything.
A Canadian blogger recently said cryptos are backed by fairy farts. Your thoughts?
I think there's a market for cryptos, and particularly Bitcoin, and I don't see it going away until the governments ban them. And they're going to ban them at some time when they go crypto. It's as simple as that. Because they don't want competition. And they're going to go crypto so they know every penny that we spent, where we spent it, how we spent it, what we spent it on, so they could get their money called tax dollars. Because, again, I was the assistant to the Secretary of the New York State Senate. I ran major political campaigns in Westchester County, the richest county in America. I was the chief government affairs specialist for the chemical industry. I was killing environmental legislation at the height of the environmental movement. I wouldn't know what I know if I wasn't on the other side. Then I started to grow up. They want every penny that we have because these people, the politicians and bureaucrats, all they do is suck off the public tit. They never work in their lives. All these bureaucrats, these are jerks and morons that can't make it in the real world, suck into the political system so they get a job. So they want every penny that we have so they don't have to work in the real world, so they're going to go crypto. So they know every penny we got and they could get every tax penny from us. And that's going to bring down the crypto markets.
Biden is talking about regulating cryptos in the U.S., bringing in digital currency. Is that all part of it?
Yeah. Again, we wrote about this, 3 years ago? From going from dirty cash to digital trash, headline of the Trends Journal. Old news. Again, we bring you history before it happens.
For the next number of years, where do you think the safest places to live will be?
I don't know. Probably someplace like Patagonia, because if there's a nuclear exchange, a third of Americans won't mind if there's a nuclear exchange between us and Russia. That's how stupid the people are. That's how stupid they are. And if you don't believe how stupid they are, swallow the crap coming out of Trudeau's mouth. No, Biden's mouth. How about Trump's mouth? No, I like little Lindsey Graham's mouth. Oh, Mitch McConnell now. He's brilliant. Oh, Nancy Pelosi. Look at the morons out there.
Will quantum computing make everything hackable?
I don't know. But we're going into the metaverse. They're taking more and more of the real life out of our lives. You go to a concert with young people listening to music. They sit there. In the old days, we used to get up and dance, and it's a whole different world.
They're too busy digitized on their phones, Gerald.
They're digitized.
Yeah, they're addicted to their phones.
Yep, and yep. And by the way, according to the University of California, Berkeley, stay on a phone for 17 minutes a day for 10 years, and your chance of getting a brain tumor only increased by 60%.
Is the pandemic just a tool to bring in digital ID and the social credit scores like China has?
The COVID war is to take more control of our lives in every way possible. In every way possible. Listen, close down your store. You're non-essential. Oh, you could stay open. At Walmart, you could stay open, Costco, you could stay open, all your big guys, all your little people close down. Oh, and stay in your house. Stay in your house and put on that mask. Oh, and take that shot. If you don't take that shot, you got no freedom, can't go out, can't get a job. The whole thing is a takeover of our entire lives.
Could the experimental injections that are currently in human trials be an unwanted game changer for society?
Yeah. Oh, you mean the Operation Warp Speed gene therapy shot first ever injected into human beings? That one? Operation Warp Speed? So to me, you gotta be warped to take the Warp Speed shot. Nobody knows what this thing's gonna do. No one. But the good news, and there's real good news, the CEO of Moderna sold more than $400 million in company stocks during the COVID war. Isn't that nice? 400... Morons and imbeciles call them big pharma. They're drug dealers. Oh, I only lost a niece from opiates, all right? And how many people die of opiates? How many people take all these allotropic drugs that don't cure chronic degenerative disease and screw them up? Big pharma. They're drug dealers.
What's going on in China?
again, they're locking down the joint. There are hardly any deaths. They got 1,500, new cases. 1,500 new cases out of 1.4 billion people, and then what do you got? Like 200,000 cases in the UK. I think the average in the United States is like over a 7-day week is like about 34,000 cases, and cases don't mean deaths. I don't know. It's again, we become the Chinese way. The government tells you what to do, you do it. We used to make fun of the people for wearing masks. Oh, they locked down the place. Can you imagine they locked down the city? Yeah, poof. And they do it all over the world now. So the Chinese way is the way of the world.
What is the metaverse?
And the metaverse is taking, again, you went from go back to the industrial age. Before the industrial age, individuals used to make the glasses and the shoes and this clothing, and the individuals made it. Then it became industrialized. Then you got all one look, very, very few different ones. And now you're seeing the same thing happen. It's a new age, and it's totally different. The 21st century is totally different to the 20th century as the 19th century was the 20th century. You didn't have automobiles in the 19th century. You didn't have airplanes. You didn't have electricity like this. So it's a whole different age. Whole different age that's going to continue to sap the human spirit away from life. You go back to the late 80s, mid 80s, when all of this stuff started to become digital in music. Once upon a time they used to use their heart, their soul, their breath, and their passion to play an instrument. Nah, we don't need that anymore. We'll digitize it. Go on, get out of here. And we'll save money doing it.
Gerald, I remember the cover on the 1968 Mechanics Illustrated saying flying cars by the year 2000. Where are our flying cars?
They're not going to come out for a long time, just like driverless cars aren't going to be for a long time. Well, they have driverless cars in some places, going from point A to point B, trucks and that kind of thing. Way far away from it. Again, they were talking about driverless cars happening by now. When you go, again, we wrote about this back in 2017 when all that stuff was coming out. So no, it's not going to happen. Not for many years.
Yeah, the driverless cars can't handle things like rain and snowstorms, which we have a lot of in both countries.
I mean, you look at the traffic.
Yeah.
I mean, look, what are you kidding me with this stuff? Again, it's the big tech taking over the world.
Are we likely to see central banks adopt digital currency?
Yep, absolutely. I said
yep.
They're all going to do it. So they know every penny you spent, where you spent it, how you spent it, so they can get it.
Should law enforcement and the military be fighting for our freedoms alongside truckers and patriots?
I think that they should leave us alone and leave the people alone. And this freedom has been gone. There's no clearer example than the truckers' convoy, the Freedom Convoy. What a name, Freedom Convoy. And all the lies that came out. That little piece of garbage you got up there, that clown playing Prime Minister, President, whatever the hell he is up there, true dope, and telling all there are people wearing Nazis and anti, whatever, all the lies. You mean all those tens of thousands of people, and you're picking on one or two that did this or that? Or somebody peed on a statue. What are you talking about? Again, I'm sure I began by talking about the hypocrisy of how they covered the Iraq War, the Syria War, the Afghan War, the Libyan War. Oh, and I forgot. The Yemen War. Oh, you mean the Yemen War? What's a Yemen? Oh, you mean the place over there where it's the worst humanitarian crisis on earth? That the Saudis and the United Arab Emirates, with the help of the United States, are destroying? Oh, we won't put that in the news. We won't show all those dead civilians over there and what they're bombing. Oh, and the clown playing Secretary of State in the United States, Blinken? You mean that clown that went over there when Saudi Arabia announced that they were going to start the Yemen war in 2015 from Washington, D.C., and they sent Blinken over there for, quote, intelligence to help destroy Yemen? That guy? Yeah. How come they're not doing that? How come they're not showing? How come How come these little prostitutes, these media whores that get paid to put out by their corporate pimps and their government whoremasters aren't showing the destruction every day like they're doing in Ukraine? How come they're not doing it with Yemen?
What are the latest trends you're watching at the Trends Journal?
Well, you just heard a load of them, and again, the COVID war is going to wind down. It is winding down, and it may wind up again at another time. We don't know when, but the greatest fear we have right now is that World War III has begun. Again, it doesn't happen in one day. And World War II began when they bombed, Pearl Harbor. Yeah, right. It wasn't the United States cutting off all the oil to Japan and all the other things going on. No, forget that. And by the way, to me, there's a great work of art. It's a graph. It shows Napoleon's march to Moscow in the 1800s. He leaves Poland with 420,000 men. He comes back with 10,000. There's another thing called Operation Barbarossa, Hitler's attack on the Soviet Union. He killed 27 million Russians. Who are the first ones to defeat Germany? Oh, the Russians. Ukraine's not going to defeat the Russians. And all the money, all the weapons to keep this thing going, to me, is criminal. They should negotiate for peace rather than rest in peace. You're not going to beat the Russians. And by keeping this war going and all of this hero talk and on, it is, to me, it's sinful. So they should be negotiating for peace because you're not going to beat the Russians. No way, no how. And the biggest clown joke out there is all these, quote, defense experts telling what's going to happen. All these little clowns that haven't won a war since World War II shooting off their mouths saying what's really going on over there. Go to my channel, Gerald Celente, on YouTube. I did one with Douglas McGregor, who is the former Army colonel, and Russell Bentley, who's in Donbass. This guy's originally from Texas. He married a Ukrainian woman. And get another side of the story.
What's the latest at Occupy Peace?
Again, Occupy Peace. If people don't donate, then don't donate. Don't do anything. We're fighting for our freedom. We're fighting for our freedom. They robbed it from us in the COVID war. They will kill us in World War III. They asked Albert Einstein, what kind of weapons will be used to fight the Third World War? He said, I don't know, but they'll be using sticks and stones to fight the Fourth. United we stand, divided we'll die. So please donate to OccupyPeace.com.
And once again, how can people sign up for the Trends Journal?
TrendsJournal.com. TrendsJournal.com. We're the world leader in trend forecasting.
Gerald, thank you so much for being on This Week in Money.
Thank you.
My guest has been Gerald Celente, publisher of the Trends Journal. He was speaking to us from historic Kingston, New York. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Victor Adair, and Gerald Celente. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.